do you see any key consumer trends that a typical MBA student must understand?
Yeah, so just to correct one thought, Rohantha, we have 5.5 million households, but we only have 1 million consumers on credit. That means only one out of 5 households, ideally, will have a credit card. We have to segregate between debit cards and credit cards. Debit card is what you get linked to your bank account as a payment instrument. So that is 18 million. And if you're talking about credit, we have only about 2 million cards with 1 million people. And if you look at 5.5 million households, every five households, if you look at, only one household will have statistically a credit card, right? So that links to what you said in terms of purchasing power, etc. So when we look at it, we have to segregate this into multiple pieces. One is, if you look at the payment instrument, whether it's a credit card or a debit card, the modality of that is different, because there are 3 ways that you can have a card. First concept is pay later, which is your credit card. You consume the service or product now and pay later. And then you have pay now, which is your debit card, where you consume the service now and you pay right now by debiting your bank account. You also have the third concept, which is pay before, which is your typical top-up reload cards that you have, just like a mobile prepaid, postpaid mobile application, where you top up the card if you travel to other countries, and then you can use it for transit and other mechanisms, right? So these are the 3 concepts. So when you understand the payment cards, you have to understand this in these 3 concepts. And payment is one thing, but providing credit is a whole different other topic that we will have to discuss. But typical MBA student, I would suggest, if you are talking about the payment side, you'll have to understand where the payment dynamics are going, where people are no more moving into debit card use instead of credit card use. People are moving into in-app payment use, e-commerce payment use, because e-commerce is growing really, really fast in Sri Lanka as well, over 40%. So that's different thing. And when it comes to credit, it's a whole different conversation on providing credit to households and SMEs and MSMEs.
Good evening, everyone, and welcome to yet another MBA Diary session. With us, we have an eminent speaker who will be sharing his insights on our topic today. To introduce our speaker, I would like to invite Dr. Lanka Maldives, the pioneer behind the MBA Diary series. Doctor, over to you.
Thank you, Ruth. We have an amazing personality today. As you know, MBA Diary, I think we are at the 126th MBA Diary. The whole purpose of this MBA Diary is to invite key people in society to come and talk to us and share with them, all of us, on the reality in the marketplace, so that we will get more and more closer to the challenges that are there in the market. So we've had about 5 or 6 ambassadors, the ambassador to, I think, UK, Saroja Sirisena, ambassador to China, Dr. Palita Kohana. We've had the chairperson of Unilever, Haja. So likewise, we've had outstanding personalities who come and talk to us about the situation in the changing dynamics of the country. Now, today, we have yet another very, very hot seat person, has almost 20 years of experience in the banking payments industry, currently operates as the country manager for Sri Lanka and Maldives for Mastercard. Previously, he held positions as Director of Account Management and Head of Digital Payments for Mastercard in Sri Lanka and Maldives. Prior to joining Mastercard, he was the Head of Payments and Cash Management of Hatton National Bank. He also led the digital banking team of the bank. Prior to joining HNB, he also played managerial roles in Amana Bank, ICICI Bank Sri Lanka, and Sampath Bank in different areas such as information security, risk, IT management, and card operations. He has led several digital financial innovations in Sri Lanka and South Asian region throughout his career. A member of the committee appointed by the Ministry of Technology to advise the Cabinet of Ministers on digital banking, blockchain-related industries, cryptocurrency, policy formation. He also serves as a steering committee member for the technology-related research by National Science Foundation. Holds a BSc Honours degree from the Information Technology from Sri Lanka Institute of Information Technology and a Master's degree, MSc from the Staffordshire University, UK. Ladies and gentlemen, the person who is heading the country manager for Sri Lanka and Maldives in Mastercard, Sandun Hapugoda. Sandun, over to you.
Thank you very much, Dr. Rohantha, for that introduction. Let me put my slides up, and until we get the slides, maybe something that you forgot to mention is I am from the very first batch of APIT for the Masters. And I'm one of the very first members of the APIT Masters batch, and they started MSc at that time. So I'm really, really glad to be talking to you today. So since we have a limited time, maybe we can quickly go through the slides, couple of slides that I have. So what we will be discussing today, we will quickly touch upon the global digital trends in payments. We will discuss about one of the modern things coming up, which is the push payments, which is different to the typical card payments that we know. We will also talk about different digital payment acceptance modes that is available in the country and the world. We will also touch upon a little bit on open banking and the high-level concept about it. Very brief introduction about blockchain and how the payment ecosystem is changing with blockchain, and maybe one or two slides on the digital payments. Let's try to do this in 20 minutes. So as you know, the consumer reality is changing now. Gone are the days that people used to use the bank accounts just to keep money and transfer to somebody else. But now the banks are being challenged by modern players like fintechs, digital banks, and even merchants sometimes, where they're facilitating whatever the banks used to facilitate, like typical fund transfer payments. As an example, banks used to facilitate for fund transfers, but now if you go to India, you can send a fund transfer through WhatsApp, right? So this new consumer reality is supported with a lot of intelligence that they develop for the consumer, so you can build a better consumer experience. So many integrations, not only with their own systems and multiple other systems, but also some of the players like N24 in UK, in Europe, they are integrating with their competitors as well to get whatever the best services that their competitors offers and give that as a single one-stop shop for their customers. A lot of virtualization is happening. I'm sure you know about it. That is to save the cost of hardware and implementation and go-to-market. By doing such technology initiatives, newer players, modern players, new fintechs, they kind of have gain the ability to go to market fast. With the globalization, we see multiple players having data about you, getting into payments industry to facilitate not only e-commerce, but also to facilitate your transfers, international transfers, etc. I'm not going to cover the areas of convergence and connectivity, but I'm sure you are pretty much aware about what it is. So I wanted to show this slide on two fronts. There are typical banks, those who provide financial services, but also there are new fintechs coming up in the world who are challenging these typical traditional banks in terms of payment side. So what happens is banks have to now keep up with these modern players or other evolving players if they don't want to just be a data record just to have the balance, just to keep the balance. This slide has a mix of those players. So if you look at, there are some of the players, those who are traditional players. However, now they are adopting modern technology to become more agile, to go to market fast with the changing world. But then you have modern players like Monzo, Revolut, N26, those who are sheer fintechs, those who are getting into financial services industry as well. And they become more agile, and they typically can go to market faster than a traditional bank, which has a lot of processes, procedures, as well as bureaucracy. So what are the two ingredients that will change the future of the payments industry, and that will get the customers to stick to their whatever the service that they give through mobile or any other digital method? One is the digital experience. How do you redefine your digital experience with your customers, and how do you expand your digital experience? This is what I spoke about earlier. So gone are the days that we used to have different systems, different services for individual facility that we used with a financial services institution. Because as an example, those days, maybe you have a mobile banking application. If you want to launch a mobile banking application, I used to work for 4 banks, so I know how things happen. So if you want to launch a mobile banking application, you look at a vendor and launch a mobile banking application. But let's say if you want to revamp your internet banking, you call for another RFP, look at another vendor, and you launch your internet banking portal. So what happens there is maybe you can have a very nice internet banking portal, but the same customer goes to mobile application. It could be giving a very bad consumer experience, or vice versa, right? But now what happens is financial institutions, fintechs, merchants, everybody in the digital payments ecosystem, they're trying to give an omni-channel experience. What is omni-channel experience? Irrespective of the touch point that you have, irrespective of the channel that you access in the financial institution, your experience would be the same. So as an example, if I'm to take a very simple example, if you want to do a fund transfer, whether you're using your branch channels, whether you're using internet channels, whether you're using mobile channels or ATMs, so whatever the touch point that you have for the financial institution, your user experience would be more or less like the same. Now, when we redefine the user experience, a lot of financial institutions, including large banks, now considering not only the external consumer experience, but also the internal user experiences for their own employees as well. Moving forward, there are different ingredients that you can think of if you are launching a financial services application or a fintech application. So there could be on your one vertical, you have consumers on the top, and then you have the corporates on the bottom. So your customers could be anything in between, either the consumers or the corporates. Now the corporate, SMEs, MSMEs would probably fall under the same category. In terms of services or solutions that you can give through the digital services, that could be one side could be a payment initiation, or the other side could be a account information, like simply accessing your bank account to check the balance. Now, what happens is now, when the modern fintechs, when they launch a financial services application, they look at how they redefine the user experience by selecting whatever the services that they want to extend, which will enhance the user experience to keep the users engaged with their mobile application or any other channel that they want to launch. Like as an example, Apple Pay as an example today. Now, Apple Card, Apple Pay, everything put together through Apple. If you're a user in a country which has Apple Pay, there is no need of you using any other bank's payment instrument or a card or something like that. You can simply tokenize your card in Apple Pay and keep on using, or you can get your own card through Apple Pay and use that card for your payments as well. See, the challenge now the typical banks will face, the second example I wanted to quote is the WhatsApp, where WhatsApp can facilitate the same thing that a bank mobile application can provide to transfer funds between 2 accounts. Now, what happens is probably WhatsApp will provide it free, and we have large banks, financial services, institutions providing these services at a cost. So in this ecosystem, you have one entity which considers financial services as a secondary service, who also gives the same financial services at a no cost. But then you have the traditional banks and financial services industry participants, those who give the same experience at a cost. So how can you compete with this, right? So that's a ongoing debate, that's an ongoing challenge all the traditional players in the financial services industry face. So that's the context of where the world moves. Talk to talk a little bit on the changing landscape. Now, typically, we used to have, I'm a little biased towards cards because I'm representing the card industry. So typically what we used to do was this pool payments, we call it, where there is a customer and then you have a merchant. You as a customer, you have a passive device, which is your payment card, and you go to a merchant who has active device, a POS terminal, and you give your credentials, which is nothing but a payment card, and merchant swipes that in a machine and pull money from your bank account, right? So we call it pull payments. And that's what we've been doing for last 70 plus years within the payments card industry. But now what happens is the times are changing. Customer used to be a passive entity with a plastic as their identity, but now all the customers have a computer in their hand, powerful computer in their hand, which is nothing but their mobile smartphone. So consumer now can go to a merchant or a beneficiary, can scan their identity or identify their identity by using a QR code or something like that. And instead of merchant pulling money, consumer can now initiate a push transfer directly to the merchant. We call it push payments. So if you have heard about Lanka QR and other direct fund transfers that we do to the beneficiaries, that's all falling into this push payments category. Push payments are also considered a little bit more secure because in a pull payment mechanism, customer can always come and say, I didn't give my card or some other mechanism to dispute the transaction. But when it comes to push payment, you're using your own mobile phone to authenticate yourself and debit your own bank account and instruct your own bank to do a fund transfer to somebody else. So it's very difficult for you to come and say, I didn't know or I didn't do that particular transaction. Moving forward, talking about digital payment enablers, we are talking about acceptance landscape. So you had typical point of sale machines, which is the electronic device that you can see in supermarkets and all other places. So typically a POS terminal is a little expensive. It used to be around 75,000 rupees before the whole economic problem in Sri Lanka. But now it costs about 120,000, 150,000 rupees. But to substitute that, now we have the Android point of sale terminals, which still cost you about 70,000, 50,000 rupees, right? The problem with these POS machines is because there is an investment, not all the banks will give these POS terminals to the bottom of the pyramid merchants or the SME, MSME merchants. So how do we cater to these segments, those who are representing SME, MSME segment? We have different other technologies. One is mobile POS. Mobile POS has two sides. One is it could cater to certain use cases like deliveries. Like as an example, if you order pizza today, that pizza delivery person will come with a mobile POS terminal, which is nothing but a small gadget, communicates with your mobile. So instead of having one device which has the communication and also the card capturing capability, you have a small device which captures the card and it communicates through the mobile phone's connectivity. So two different use cases would be one for delivery, even though a Pizza Hut or anybody like that could be a large merchant, the specific use case supports them to have a mobile POS. Or you could be a small retail shop, and if you are not able to get a point of sale machine, you would be able to get a MPOS device. Now, MPOS device would cost around somewhere between 10 to 15,000 rupees, right? Now we are talking about bottom of the pyramid merchant. If you are not able to even afford that, how can you enable acceptance? Before we talk about that, we also want to talk about internet payment gateway. Now, internet payment gateways are also increasing. The payments are really increasing in Sri Lanka through internet payment gateways. We call it IPGs. To facilitate internet payment gateways, we have different solutions through different banks, supporting tokenized payments, in-app payments, etc. So tokenized payments is where, as an example, pick me today, they tokenize your card. And instead of keeping the card by themselves, they keep the card number with their bank, and they initiate the payment by using the token. So that way, it gives the better consumer experience. So you don't have to keep on entering the card number, but also your payment details are secure. But if you have a merchant, like let's say Netflix, those who have payment card industry data security standard approved, then what you can do is, instead of keeping data with somebody else, you can keep data by yourself. So contactless transactions are also growing in Sri Lanka. So we were talking about the mobile POS merchants, but if you can't afford a mobile POS, then you can probably get a QR based payments as a merchant. So you can talk to any of the acquirers in the country and say, I need to accept digital payments. I am a very, very small merchant. So I need a digital payment acceptance mode. It's very likely you will get a QR based payment option. New kid in the block is soft POS, where you don't have to even have a QR code, because QR code deployment also has a cost. So instead of doing that, the soft POS is a modern way where you, as a merchant, can use your Android phone to simply download a mobile application. And your Android phone, as long as it has contactless capabilities, people can tap on your phone and make a payment. So this particular solution is available in Sri Lanka as well. And we are trying to rapidly expand. So as an example, if you're a tuk-tuk driver, and if you can't have a QR code or a mobile POS, you can simply have an Android phone and download the bank's application and start accepting contactless payments on your mobile phone itself. Talking about Sri Lankan context, we have 35 debit card issuers, 17 credit card issuers in the country. We have 12 financial acquirers of payment cards, those who accept payment cards today. If you look at the number of cards, we have about 18 million cards today in Sri Lanka, debit cards in Sri Lanka, and we have about 2 million credit cards today in Sri Lanka. If you look at credit cards, active credit card users, in my very personal opinion, would be about 1.5 million, even though we have 2 million cards. The growth of credit is slightly stagnated compared to debit, and debit card is growing really, really well in Sri Lanka. However, even though we have 18 million cards, the room for growth is immense, because today, if you look at the statistics, average debit card is only being used about 6 times a year. 6 times a year. So it's not so great. And even though we have 100,000 POS terminals in the country today, you might see when you go to supermarket, you see so many transactions happening. But if you look at the country statistics, average POS terminal is only POS terminal does only 4 transactions a day, right? So there's a lot of room to grow. So that's why in many forums I say Sri Lanka has a very decent digital infrastructure with a poor digital payments adoption. So infrastructure is there, but the adoption we need to improve by making more, building more awareness. So what to look forward is basically, as I spoke, on the merchant side, we have QR-based acceptance coming up. We have soft POS and contactless as new methods of acceptance. We have tokenization, card on file, increasingly being adopted by merchants. E-invoicing is something that we have seen, which is adapted by many merchants in Sri Lanka, especially those who are doing doing their own business. And then multiple partners getting together in Sri Lanka to provide special acquiring services. On issuing side, on consumer side, we have seen contactless payments are growing really, really fast. We've seen a rapid growth in contactless payments. Contactless on mobile is also growing in the world, but in Sri Lanka, it's a bit of a new thing. It will take some time. in-app payments and online payments, during last 2 years, we have seen a significant growth. We have been growing in a very low growth rate, but during last 2 years, it has started to change. And I think we are at the right moment that countries change in the whole digital payments landscape. And it will, my opinion, it will grow rapidly in future. We have IoTs and wearables. Globally, if you look at the context, you don't have to, let's say you're an Apple user, and if you have Apple Pay, you don't have to really pull out your Apple phone. You can instead have the same application in your watch. So you can use your wearables to make a payment, quick payments. And we have seen a rapid growth in the world. And in Sri Lanka also, there are a few pilot projects happening, and you would be able to see some of the solutions really soon. And to do that, we have so many risks and challenges. We have certain data security and storage concerns. We have data rights and dispute related concerns. As you know, that Sri Lanka recently announced a Personal Data Protection Act as well. The other issue could be not having standardized APIs to facilitate multiple partners to join an ecosystem. And authentication and onboarding also could be a challenge. So there could be different ways that a fraud could take place, from issuer side, acquirer side, merchant side, and cardholder side. Each point I can talk about a day, but I'm not going to cover. I'll probably share the slides with you in case if you have questions, you can talk to me later. And when you do security design, a lot of people ask at what stage we'll have to consider security when we do a mobile application. So what we suggest is usually security has to be a part of the design itself, and then while you develop the mobile application or while you develop the digital payments application, security has to be considered throughout. So maybe Rohant, I'll just stop there because of the interest of time, and maybe we can take up a couple of questions if required.
Thank you, Sandun. Thank you very much. So very interesting presentation, and I think it just tells you the overall landscape change. There are many questions coming in. I'll just pick up a few of them. The first question, Sandun, is, from your experience, have you seen a drop in the payment system in the last 1 year?
Yeah, I would say if you look at the global context, the answer is no. If you look at the Sri Lankan context, still the answer is no, Rohanta. Because even on the Sri Lankan context, if you look at the usage has gone up. And if you look at the dynamics may have changed. As an example, if you look at the sheer number of transactions, debit cards took over credit cards in 2014 in terms of number of transactions. But in terms of number of volume, debit cards took over credit cards about 5 quarters back. But now, if you look at, people are moving from using their credit cards to debit cards, which is a very good sign for a developing country, number one. Number two, those who have been using their payment card only to use as a ATM card, where they go to ATM, withdraw money, pay something to the ATM, take that money, probably go to Damro and purchase a sofa. Now they have realized, instead of doing that, I can straight away go to Damro and give my card and make a payment, right? So this particular segment is also improving, and the stakeholders in the industry is also putting a lot of efforts by encouraging people, especially the tier 3, tier 4 level people, to get into digital payments by having different ways of encouraging them to do more utility payments. There are different promotions done by multiple entities. In fact, we run one these days. So by doing these tactics, we try to pull customers into digital payments. Of course, we had a good traction during COVID times because people didn't have much of a choice. So those who didn't do online transactions, we've seen some of them shifting towards online transactions. And those who shifted, there were majority of the people those who they stick to that particular payment methods.
Mihiri is asking you, one of the MBA students, uh, what's the penetration of cards usership in Sri Lanka? And
Yeah.
do you see the penetration declining because overall the economic shrank by 11.5% in the first quarter? And did this have an impact on the card usership and usage?
Yeah, so depending on how you interpret, if you look at on the dollar terms, there may have been a decline. But if you look at the sheer rupee term, if you look at every quarter, we have grown. We have central bank bulletin that we even recently published, the quarter 4 of 2022. Even on that, there is a quarter-to-quarter growth on the digital payments, both on debit side as well as credit side. So that could probably, economy is something else, but when it comes to payments, especially with the inflation going up and the cost of living going up, cost of peripheral items and the cost of living itself going up, the usage of transaction values has also gone up. And we have also seen people using their payment cards now for low value transactions as well, which is also another good sign, because people, those who didn't use for low value transactions like simple mobile top-ups, etc., now using their debit cards, and especially the debit cards, but also credit cards as well, to do these mobile top-ups, etc., for low value tickets. So we have seen the overall value going up, but also we have seen number of transactions going up, especially on the low value segments.
Sandun, just to give some clarity, how many percentage of, now we have about 21 million people, of which how many people use a credit card in Sri Lanka?
Yeah. So before I answer that, the question that you asked before about the digital payment cards usage compared to the personal consumption expenditure is around 5% today in Sri Lanka. So the overall cards usage, if you look at the dollar terms, it's about $2.5 billion at the moment in Sri Lanka. So it's around 5% of the PCE. To come back to your question, we have 21 million population, and we have 18 million debit cards today, which means every 1.4% of every 1.4 adult, every adult has a 1.4 number of cards, right? But when it comes to credit, Rohantha, we only have about 2 million credit cards. We don't have statistics in terms of unique users, but my personal assumption would be we will have about 1.1 million users using credit cards. Now, the difference is the typical credit card issuers are going behind the same segment, those who are more affluent and mass affluent, to give a card. So it's very likely you're being approached. If you are a credit card, if you have a credit card, there's very much likelihood that some other bank will approach you to give another credit card as well. So you will either cancel the previous card and use a new card, or you will use both cards. But now there are initiatives, especially by different NBFIs and different banking partners that we work with, to go into the next level, to focus on the SMEs, the bottom of the pyramid segment, not really the bottom of the pyramid segment, but the mid-tier, those who will have mid-range credit, to give a low-value credit cards. So that will enable their buying capacity, or if you're SME, it will also improve your purchasing capacity. It will help your retailer financing, or whatever we call it. But at the moment, it's around 1.1 million people.
So in other words, Sandun, you have about 85% of Sri Lanka's population using a debit card, and about 19% people using, or 19% of households, if we just say that a credit card is used by one person in the household, approximately, you're saying that about 18% of the people use credit cards.
Yeah, that is right. If you look at the
Yeah.
population, that's right. But if you look at the adult population, maybe 1.4, 1.5 million, you have to compare the adult population versus usage of debit card. So if you have 1.4 million adults and you have 1.8 million, so every adult has more than 1.4 cards, or rather every two adults have 3 cards.
Okay. I actually just looked at households. I'm saying that 5.8 million households are there.
Yeah.
And every household, you might have one person who has a credit card, right? Approximately. I've taken the higher level. I've taken the higher level because a lot of people might be having multiple credit cards. But the question that I'm actually arriving at, Sandun, is if you currently research says that 32% of Sri Lanka's population has sold their motorbike or their fridge to buy their basic to live.
Yeah.
In the overall, our poverty levels have gone up to about 32%,
Yeah.
and in the estate sector, the poverty has gone up to 51%.
Yeah.
So my question is that obviously the people who are using the product in terms of credit cards are essentially maybe the urban market, essentially
Yeah.
speaking, the urban market. The rural market, you have what's it called, purchasing power crashing.
Yeah.
So that's what we see in Sri Lanka, and we see the same thing in other parts of, that we see, if you take the whole South Asian region, India is like growing at about 6% GDP growth. So obviously their credit card usage and overall usage and consumption is higher. But if you say Pakistan, which is something like Sri Lanka, overall poverty levels have gone up to 60%. And, the whole economy is, just got IMF loan. So they're also recouping. So in terms of the region, we see some kind of similarities. But the question that is being asked by many people is that, do you see any key consumer trends that a typical MBA student must understand?
Yeah. So just to correct one thought, Rohantha, we have 5.5 million households, but we only have 1 million consumers on credit. That means only one out of 5 households, ideally, will have a credit card. We have to segregate between debit cards and credit cards. Debit card is what you get linked to your bank account as a payment instrument. So that is 18 million. And if you're talking about credit, we have only about 2 million cards with 1 million people. And if you look at 5.5 million households, every five households, if you look at, only one household will have statistically a credit card, right? So that links to what you said in terms of purchasing power, etc. So when we look at it, we have to segregate this into multiple pieces. One is, if you look at the payment instrument, whether it's a credit card or a debit card, the modality of that is different, because there are 3 ways that you can have a card. First concept is pay later, which is your credit card. You consume the service or product now and pay later. And then you have pay now, which is your debit card, where you consume the service now and you pay right now by debiting your bank account. You also have the third concept, which is pay before, which is your typical top-up reload cards that you have, just like a mobile prepaid, postpaid mobile application, where you top up the card if you travel to other countries, and then you can use it for transit and other mechanisms, right? So these are the 3 concepts. So when you understand the payment cards, you have to understand this in these 3 concepts. And payment is one thing, but providing credit is a whole different other topic that we will have to discuss. But typical MBA student, I would suggest, if you are talking about the payment side, you'll have to understand where the payment dynamics are going, where people are no more moving into debit card use instead of credit card use. People are moving into in-app payment use, e-commerce payment use, because e-commerce is growing really, really fast in Sri Lanka as well, over 40%. So that's different thing. And when it comes to credit, it's a whole different conversation on providing credit to households and SMEs and MSMEs.
Sandun, one last question, since you've been a MBA graduate from Staffordshire University, and of course now heading Mastercard, what is your advice to the youngsters who are listening in, who are essentially all MBA graduates?
Yeah, so I think I'll share my MBA experience as well. I mean, I don't know that now the setup. I mean, at least then you had the coursework, and then you had the research. I've seen some of my friends actually doing really well in the coursework, and then they drop out when they want to do the research. So I think what is really, really important is the commitment that you give towards your MBA or MSc or whatever the master's course during the period that you are doing it. So your commitment is the only thing that will get you the degree, and you have to be laser focused in terms of what you should do, what are the deliverables that you want to get out of the MBA or any master's program that you do to successfully complete it. So that's my only advice. I'm talking with my experience with Apit, and that never goes wrong.
Thank you very much, Sandun. Lovely talking to you and getting a view of the real situation out there in the marketplace. Ruth, over to you.
Thank you, Dr. Rohantha. Sandun, thank you so much. You have taken your time out and shared your insights into your specialist area. And I was trying to keep the best for the last, and trying to celebrate you as an alumni. And it's a proud moment for us, because having you on our platform it's wonderful, especially this year, since we are celebrating 20 years of Apit graduates. So thank you again, and it was lovely having you on MBA Diaries. So as we draw to a close, I'd like to remind all our industry partners that at Apit we have a well-structured internship program for computing, business, and law students. So if you do have any vacancies, do send it across to us. And we have newly launched 3 MSc programs. That's MSc Marketing, MSc Cybersecurity, and MSc in IT Management. So feel free, if you are interested in upskilling yourself, feel free to make an inquiry, walk in, or email us. So with this, I draw to a close today's MBA Diary session with Sandun. Thank you so much, Dr. Rohantha. Thank you. And for everybody who has joined in here in Sri Lanka and abroad, have a good day, a good evening, and a good night. Till next week.